Hello traders, Cousin Vinny coming to you from theclosingprint.com, February the 23rd, 2025. In this video, we'll discuss the sudden shift in the S&P 500 from a new all-time high on Wednesday, only to close down 1.66% for the week on Friday. Is this pullback to the 50-day a sign? One thing is for certain, we're going into the week with 2 bullish indicators, 2 neutral, and the majority, 16, bearish. If you followed our lead on Thursday and Friday, you most likely reduced some of your exposure to the markets and remain a bit cautious going into this week. One thing is for certain, all the New York FANG components looked pretty weak on Friday. We broke the uptrend that started back in September. RSI is dropping. We saw a bearish divergence with RSI making lower highs as the New York FANG made a new all-time high 2 weeks ago on Friday. Momentum indicators are moving lower. That's telling us we could see a follow-through this week with earnings out of NVIDIA on Wednesday after the close. While the New York FANG components, 10 stocks, does look very bearish, I will say the Qs still remain above the 50-day despite the bearish thrust lower on Friday. Still, I would be cautious in tech land, especially going into NVIDIA earnings on Wednesday, with this turning out to be the 4th above average selling volume day in the month of February. Turning to the S&P 500, we closed right on the 50-day and the put wall, which is at 6,000 currently, so the close at 60.13 should be concerning, though we'll wait for judgment on Sunday night when futures open and Monday's price action to give us an idea what to anticipate next. Small caps also gave us a bearish signal, which is kind of unusual when you consider that with the 10-year moving lower, you would expect the IWM to move higher. As such, the reverse is the case, and it's most likely a lot of fear with VIX spiking on Friday, with the potential to follow through this week. We're certainly not in the 20 to 22 range, so there could be some more volatility to start trading on Monday. Finally, we have the New York Stock Exchange, new highs minus new lows. While it is below the zero line, histogram isn't really stabbing lower like it was back in December. New York Stock Exchange advanced decline is fading, and we do have a red elder stick on the index itself, with the potential for it to come back to the longer-term moving averages and maybe some of these previous support levels. But it's not really that bearish at the moment, and with the S&P closing at the put wall and a pocket of positive gamma, there's a possibility we could bounce on Monday. That said, let's take a look at bonds and currencies for any other clues that we might look forward to this week. Recall last week, most of our indicators were bullish at 16. This week, we're bearish at 16. So it was a complete flip in some of the indicators. As such, we're looking at junk bonds, and we're actually fairly bullish to neutral on this indicator, while the 10-year yield continues to move lower. Remember, IWM should react positively instead of pulling back like it did. The 10-year yield is moving lower. As it moves below the 50-day moving average, the risk premium is actually siding towards equities. So that's a little bit perplexing going into this week. In addition, the US dollar is sliding lower, so you would expect this to be a tailwind for equities as much as yield moving lower. And you compound that with junk bonds moving higher, risk on, you would think. So which is it? Commodities did make a new high. That's actually a headwind for equities. Again, you can see that we have many mixed signals, with Brent crude oil also making new lows. This is good for the consumer. Lower gas prices, more money to spend, despite what everyone was talking about last week with the consumer having some difficulties. And then there's gold. If you're thinking about safety or fear or inflation, you would expect to see gold moving higher. So right now we've been consolidating. Certainly not a big spike like you might expect with the sell-off we saw on Friday. One thing that is evident is that most sectors pull back. Really surprised to see IBB still above its 20 and 50 day, along with real estate. But the majority of sectors had pretty bearish candles on Friday, with the exception of consumer staples and utilities. These sectors certainly look a lot better than the remaining stocks that all took a dive on Friday, some worse than others, like consumer discretionary. Finally, there is the consumer discretionary to consumer staples ratio. We watch this closely to tell us what institutions are doing as far as positioning. Currently, it looks very similar to the start of the bear market back in 2022. Now, it's too early to tell. I'm not saying that we're going to drop precipitously, but it's definitely worth watching because the consumer staples sector is the one sector unequivocally catching a bid. If you look at the stocks down below, many of the 20-50 day crosses are consumer staples names. So keep an eye on these stocks. If you're absolutely adamant about buying into some of the weakness that we saw on Friday, keep an eye on this group because we'll most likely see a follow-through. With the S&P 500 testing the 50-day and the XLY-XLP ratio pointing to defensive positioning, it's pretty obvious that consumer staple stocks are catching a bid, like Altria Group, moving higher, MACD rising, volume increasing, the 20-50 day is crossing. CVS, another consumer staples name, rising. 20-50 day crossed back in January, gapping up, following through. Coca-Cola with similar price action. Some of you trading this last week. 20-50 day crossed in early February. We had the gap up and follow through over the last couple of weeks. RSI is showing muscle. Volume showing that institutions are quickly adding Coca-Cola shares as it makes 52-week highs. Keurig Dr. Pepper with a 20-50 day cross on Friday. Looking for this to follow through. Don't chase it. I would be looking for a flag. This does look pretty strong, though. Campbell's Soup. Don't quote me, but I believe it has earnings this week. Closing higher. Looking for a follow through. MACD rising. Volume increasing on Thursday and Friday. 20-50 day cross will most likely follow in the next few weeks, depending on what earnings the company reports. Kraft Heinz also moving back above the 20 and 50 day moving average on above average volume. MACD shows momentum is with the bulls. RSI rising. Defensive positioning by institutions pretty obvious last week, and that was while we were making new all-time highs on Wednesday. Mondelez, another consumer staples name, food products, above average volume, 20-50 day cross. Nice follow through over the last couple of weeks. This looks like it'll continue. Again, don't chase it. Look for a flag for entry. With the point being that institutions were obviously starting to buy over the last couple of weeks. Tyson Foods also potentially giving us a 50 day cross this week. Above average volume. Breaking above the 20 and 50 day, 20 about to cross over the 50 day, and RSI is rising. Some healthcare stocks also pushed higher last week. Keep an eye on Vertex. That gave us a 20-50 day cross in late January, early February. Price action continues to rise. with additional pharmaceutical names like Merck. We pointed out early in the week, it looked like it was going to start seeing some buying. I don't like the earnings that was reported, but the company is obviously being bid up, coming out of the 80 zone. So there may be a follow through here. Costco, while it pulled back, did see a 20-50-day cross to begin the month of February. With the pullback, we're watching if this bases out and holds here at the 20-day moving average with a bounce on Friday. One thing to notice as well is that the IBD 50 has very few stocks that look good for a follow through. These 4 may continue this week. Yet my overriding concern is what happens on the S&P 500 as it trades at the 50-day moving average, and the Qs come back potentially to the 50-day on Monday. Okay, traders, that's going to do it for me. This is Cousin Vinny coming to you from theclosingprint.com with your weekend video newsletter for February the 23rd, 2025. I'll send out a watch list later tonight around 12 midnight on the East Coast, around 9 o'clock on the West Coast, so be sure to check your inbox for that later this evening. Bottom line, I would be cautious going into the week. See if we can gather a few more bullish indicators going into NVIDIA earnings on Wednesday. Enjoy the rest of your weekend. Take care, and we'll see you in the morning. Ciao.